So welcome back, my dear students. This is lecture 2 in managerial accounting, and we are going to talk about some aspects, new aspects. Let's go and see. Share the screen. Okay, what the managerial accounting is. The definition of the managerial accounting is managerial accounting is the practice of identifying, measuring, analyzing, interpreting, and communicating financial information to managers for the pursuit of an organizational goals. It means for making decisions. It varies from financial accountings because the intended purpose of managerial accounting is to assist users internal to the company in making well-informed business decisions. So this is the main core of the managerial accounting for making decisions, So don't forget that the reason for the managerial accounting is just making decisions. And this is the point. So what is the managerial and what's the financial accounting? We'll come now to the what's the financial accounting. Okay, financial accounting is a specific branch of accounting involving a process of recording, look at this, recording, summarizing, and reporting the myriad of the transaction resulting from business operations over a period of time. So what I want to say here is that the managerial accounting, the outputs of the statements and the results of the calculations, all is not for its sake, but just is to help in making decisions, in making up decisions by the management. So they give data to the management, and based on this management, they will make decisions. So they are inputs for the data itself. Okay. The major differences between the financial and managerial accounting, and this is another question. What are the differences between the managerial and financial accounting? In general, financial accounting refers to the aggregation of accounting information into financial statements. So the financial accounting care about the financial statements, while managerial accounting refers to the internal process used to account for business transaction. So here we have the differences. There are a number of differences between financial and managerial accounting, which we will say it here. First of all, the aggregation. The aggregation means financial accountings report on the results of entire business managerial accounting. So the managerial the financial take out the outputs of the managerials, almost always report at a more detailed level, such as profits, products, line, customer, and geographic region. The efficiency. Financial accounts reports, as you see here, financial accounts reports on the profitability and therefore the efficiency of a business, whereas managerial accounting report specifically what is causing a problem. What is causing a problem? So the financial accounting is talking about the profitability, but the managerial accounting is looking for what is reasoning, what is causing a problem to solve it, okay? And how to fix it, of course. So the how to fix it as well. The reporting focus also is different between both of them. So let's see here, financial accounting and managerial accounting. Financial accounting is oriented towards the creation of financial statements, which are distributed both within and outside of a company. But managerial accounting is more concerned with operational reports. See, the managerial care too much about the reports, which are only distributed with a company. Standards. What about the standards? Standards, like here, like we see here, the standards. Financial accounting must comply with various accounting standards. This is the financial. Whereas managerial accounting do not have to comply with any standards. Okay, so the managerial one, no standards specifically, but the financial accounting, no, we have the double entry system, the ledger, the balance sheet, the income statement. All these are having rules and steps to make it, to finish it. Yeah. So this is another different. So here now we go for the system itself. The system financial accounting pays no attention to overall system of the company. The financial accounting is just entries and books to entry for entry. That's it. They don't care about what is the where is the company is going. What are the actually they care about only the numbers itself, for this numbers of the sake, and for just preparing the statements. And this is the end, the far end. But the managerial accounting, they take these reports and start working on it. You see? So they care about the person doing it. In financial accounting also, is concerned with the financial results. See, financial accounting is concerned with the financial results that a business has already achieved. So it looks about what happened in the past. This is the financial accounting. It cares about what happened in the past. But for the managerial accounting, look at this. It's a tool for a decision making. So it will care about the future. So it cares about the future. We'll come to the timing. Financial accounting requires that financial statement is issued following the end of account period. Managerial accounting may issue reports much more frequently, since the information it provides is most relevant to the managers. Okay, so I care in the financial accounting about the past, but in the managerial accounting I care about decision making. The core of mine is the decision making. And valuation, of course, and pay level. So those are all the differences between the financial and the managerial accounting. And here we can sum up all what we talk about, the difference between management accounting and financial accounting. We can just put both of them here, so this can help. Purpose of the information in the management accounting or managerial accounting to help managers make decisions, like we said before. But the purpose of the information in the financial accounting to communicate the organization's financial position to investors, banks. Okay, I'm doing the balance sheet because the bank wants me to show them the balance sheet. This is a purpose of the financial accounting. I'm doing the net income statement, because the bank and the investors need the income statements. So this is the purpose of the financial accounting. Primary users. Who will use the primary users in the managerial accounting are the managers, we said, because they are making decisions. But here in the financial accounting, the primary users are external users. The meaning of external users, that they are from outside the organization, from outside the company, like investors, bankers. So those, they care about what? About the balance sheet. They care about the balance sheet. They care about the income statement. This one, okay. The profit and loss statement. The focus and the emphasis. The managerial accounting is the future one, which said just now. Just now we said that it's a future-based activity. This is the managerial accounting. But the financial accounting depend on the past because it's recording. If you see, one of the principles of the accounting is to record the past events, but we don't care in the financial accounting. No interest in recording the future transactions. In accounting, generally, we care about the past transactions, not the future ones. Okay. Rules of measurement and reporting. So here, internal measures and reports not have to follow SPE, but are based on cost benefit analysis. So it's based on the cost and benefit analysis because I make the decision based on the cost and benefit analysis. But here, in the financial accounting, financial statements must be prepared in accordance with ASPE and be attested to by independent auditors. So must be checked out with the internal and independent auditors. Time span of both of them. Time span in the managerial accounting varies from hourly information to 15 or 20 years information. But usually here, it's annually. On the quarterly, financial quarterly means every 3 months. Financial reports primarily to the company as a whole. Behavioral implication. What about the behavioral implications? So we'll say in the financial in the managerial accounting designed to influence the behavior of managers and the employee. So I'll just now I'll say I'm not winning, I'm just losing. I don't make profits. So I have to affect about the behavior of the employees for them to be more active and they must be more productive so that their productivity will go higher so they will switch from losses into profits in the near future. So the managerial accounting purpose is to affect one of the effects is affecting on the behavior of the employees who are working there. But the problem for the financial accounting, the primary reports economics events, but also influence behavior because managers' compensation is often based on reported financial results. Yes, it's including, but not like the managerial accounting, the way the managerial accounting is. Now, so the managerial accounting is helping in decision making. So, so we have to know what is the meaning of the decision making. So the decision making include planning, on controlling and organizing and leading. Those are the main, and we have also sub other sub functions for the management, like coordinating, organizing, coordinating, improving efficiency, motivating, communication, regulations of business activities, maximizing profits, reliability. All those things are points of interest for managerial accounting because part of the managerial accounting is management functions. And the management functions, like you know before, in the basics of the management, include planning, organizing, leading, and controlling. Then come as example monitoring, comes the motives for the employees, come other coordinating. Those are sub jobs or sub functions of the management, but the main functions of the management: planning, organizing, leading, and controlling. And this is by the help of the managerial accounting, because through the managerial accounting we will have a data. This data will help me in making decisions. The data will help me in making decisions. Okay, here I got management accountants, means the managerial accounting help managers track the key success factors of their firms as well as those of their competitors. So I will know my situation and I will know my competitor situation. Competitive information serves as a benchmark. Managers, of course. The benchmark means like the ideal situation. You look for the benchmark and you imitate the benchmark. You look to the benchmark and you imitate it. You do like they do. Okay. Examples of continuous improvement as example. Okay. Innovation, of course. Constant flow of innovative products in response to customers' demands result in growing growth and success. Managerial accounting will help the managers evaluate alternatives, investment decisions, and research and development decisions. So the managerial accounting or the managerial accounting, yes, will help in improving the decisions regarding even the research and development, which is a part of a big organizations nowadays. Management accountants help track and compare companies' performance. Look at this, because I am doing the controlling through the reports of the managerial accounting. I do the control process, and through the control process, it's very easy and very clear that I will know my situation very well. I will know how far I did good. I will compare myself to the other companies, and I will see where I am standing. Am I in need to more correction, or I am in a good situation now compared to the other companies? All this information is provided through the statements, which in its own self just numbers, but by the help of managerial accounting, it interprets these numbers into facts and data that will help in making decisions. Uh, this was the first part, so we'll go to the second part right away. So let's see now about the decision making and what is the decision making. Decision making include these steps: identifying the problem. If I have a problem in the management, I have to know everything about it, clarify it very well, identify it very well. Second thing is to get information or about the alternatives of the solution. Third, I will identify each alternative. Weight the evidences means I will see every alternative, evaluate them based on the pros and the cons, cost benefit analysis. Then I will choose. This is the core operation of decision making, is that uh, is the core of the decision making is choosing among alternatives. Then take an action, because all the steps above, all those 5 steps are just theoretical. I didn't move into action, but take an action here is through uh, implementing the plan or implementing the chosen alternative. Then I will review the decision and check by the feedback if the this alternate which I used was the best, or was something there better than using it. So I will check out and see. Yeah. So this was about the. Now let's see, how will the managerial accounting help me in making decisions? Like, as example, from some numbers, it show me by the indicators where I am going. Like, look at this example. We have the actual results and we have the budgeted. The actual, which happened really, the budgeted, which was planning. We planned previously. We plan it. So, as example, the advertising pages sold. We sold 760 pages. That's really we sold 760 pages, but we were planning to sell 800. The budgeted means what we were planning for. So the difference or the actual results, this column is column number 1 minus column number 2. So the actual 760 minus the planned was 800. Then there is 40 pages unfavorable. Why it's unfavorable? Because if you look at this, the budgeted or the planned was 800, but actually what I did is 760. I sold only 760, which is less than the budgeted. It's less how much? 5%. 5% less. The 5% is what? If you divide 40 by 800, it will give you 5%. So again, we'll say the actual results. I might give you in the exam as example a question like this. I will tell you the actual results was blah blah blah. So you will have column 1, this one, and column 1 and column 2. So what you will do, you will subtract 2 out of 1. So 3, 1 minus 2. 2 out of 1. So 760 minus 800, that will give me 40 pages. Okay, I plan to sell 800, but what I really sold is 760. So this is not good, unfavorable, because the planned is more than the actual. Okay, how far with the percentage? Then I would say 3 divided by 2, which is 40 pages divided by 800. That will give me 5%. And the second one, the same thing, 580 minus 5080 minus 5200 will give me 120. Still unfavorable, because when I divide 120 by 5200, that will give me 23%. Same thing for the third. But when it will be favorable, if the actual was more than the budgeted, so if the numbers here was greater than the numbers of the budgeted, then I will expect favorable results. That's fine. Okay. We'll go to another points now, which is the ethical rule in financial accounting and managerial accounting. The ethical rule, and it's very important. It's not only for financial accounting, it's in generally for all the organization and all or any department, any individual who's working in organization. He must have a code of conduct and a code of ethics. Ethics tell me what I supposed to do and what I am supposed not to do, what I ought to do and what I ought not to do. It's consisted of what we raised upon, uh, and in the same time, the norms, which is never be contradicted with the work behave or behave at work. Look at this. Let me say as example here, significance of the ethical rule. Business owners and decision makers require full and objective data when reviewing business operations and making critical decisions. Ethical standard ensure information is reported in full and without bias. So I won't tell lies. This is an ethical code. I will provide the information as it is, honestly. Honestly, the information is positive, either it was positive or negative, like you see here. So I will apply the information. Uh, the other point is the code of ethics. What is the code of ethics and what is it about? In Institutes of Management Accountants, as example, we want to say that the code of ethics here summarizes the role the ethics plays in 4 areas management accounting. The first addresses competencies. The second addresses confidentiality. The third addresses personal integrity. And the fourth addresses credibility. So those are the code of ethics which we need to know about the organization. This is the code of ethics which will work. And there is as well global commitment of ethics, of course, because globally we all agree on common things like not to cheat, not to tell lies, be honest. Uh, so all this will help us in the managerial accounting, and it will help us in the organization as well. Because everything now, like you hear about the accountability, you hear about the transparency, and all this, and you hear about the disclosure, which means that you don't hide or tell lies, and all those are examples for the ethics. All those are examples: the accountability, the disclosure, and the so all the business works depends in any organization depends on applying the code of ethics. So don't forget about that. Let's see some examples here. And actually, this textbook is very nice because it's giving very good examples. Guidelines and evidence and examples for the code of ethics. Guidelines for ethical behavior. Let's say, as example, adherence to rules of professional conduct enabling competencies. The evidences, compilation of allowed and disallowed behavior. The example, no ownership interest in an audit client. So, this is an example. Enabling competencies, adherence of laws and professional standards. Example, having a request knowledge to perform certain tasks, and so on. So what I want to tell you is that the only thing I want to tell you here, and I want to get as a conclusion from this lecture, is that the code of ethics is very important, not only for the financial and managerial accounting, but for anyone who works in organizations. There must be a code of conduct, which depends on the honesty and the disclosure and the accountability. If you are accurate person, that's because of you are raised up on this point, and this is code of ethics and the code of conduct. And the duty of care as well. All this to do your work completely with integrity and without feeling that it's a boring work. It just you do this with love. You work, you respect your job, you love your job. In any field is not only in the accounting. So because code of ethics is applied everywhere now, so we have to talk also about the financial. And actually it's very important because when you, as example, let me give you a small example. If now the stakeholders are the people who have benefits of dealing with your company. They came to you and told you, we need to make more investment in your company and we need to buy more shares and stocks, but we need information. How much is the ROI, return on investment, this year in this company, in your company? Then we will say it was 5%, and you told them it's 12% by telling lies. This will be a disaster because you made a big mistake. You breached the code of ethics. You have to be honest. You have not to tell lies because you think that if you told them a lie, or it was not very responsible guy, and you told them no, 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 we are having profits of 15% this year, and it was only 4%, and they bought your stocks, invested in your stocks, then that will be a very big shock for them and very big disaster. So what will build on lies, it will lead to damages. That's why I want you to understand that the rule of the accounting or the accountant, either financial accountant or managerial accountant, the rule of those people will never change if we take it with the standards of the ethic, because it's required from every one of them to have this uh, kind of behave and to be binded very well to the code of conduct of the company. Thank you so much, and I wish you a very good day and take care. Bye bye.